Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, November 11th, 2020. I am Frank Ochoa, aka PivotBoss. First of all, I'd like to say happy Veterans Day to everyone out there who has served our country in both war and peace. Thank you very much for your sacrifice and service, and thank you to those of you currently serving as well. Let's take here a look at the daily time frame of the ES here. You'll see right now that we had this significant top that came into play here the previous couple of days, and we basically saw a range bound day in the previous session. That was a digestive day after that strong top, and now if this strong top is going to change the bias of the short-term trend from an uptrend to a downtrend, then this would be the ideal opportunity for bears to defend its prices above yesterday's high. Right now, prices above yesterday's high currently being defended by bears for a shot at a failure above that high, which would then in turn lead to likely a bearish outside day, or at the very least a failed new high selling pattern. So right now we are at the zone here that if price fails to hold above this previous high of 35.6275, that might be an early indication of weakness to come, and we may end up going to new lows for the day and likely testing yesterday's lows. Now, a failure to hold 34.90 would open up much more weakness ahead, but for right now, this could lead to a pretty quick turnaround from current levels back down, and eventually could become a 100 handle move. If this is a strong bottom and this is a strong top, then we may see a snapback to the middle of that range, which is 34.46 half. And right now we are basically 120 handles away from that level. The odds of hitting that midpoint are very high if price stays below this midpoint of the rejection day. So if price can't get above basically 3600 here pretty soon, we may be snapping back to 34.46 half. So again, this is the early indication here where weakness could be seen as a trap above the previous session's high of 35.6275s. We'll see if the failure occurs there. If price can continue to hold that level, then this could easily start to push higher through 3600, and now we start to work through the tail. So this zone is very, very important for the short-term trend. All right, let's take a look here at the NQ. You'll see here the NQ got a very significant rejection at the edge here, a bearish outside day, dropped already to the midpoint of the impulse move. And yesterday, one thing we noticed in our trading room, especially toward the end of the day, was a lot of buy signals in tech. A lot of stocks have snapped back, providing some deep discounts, and that could provide a short-term bounce. And already we're seeing tech bounce here in overnight and pre-market trading. The 15 and 60-minute charts show a bit of a rounded bottom here developing. If price can start to push through 11,800, this could open up a squeeze ahead. So 11,800 is the key level there. Now if price gets above 1100 and fails, again we may be looking at more weakness ahead. If this thing's going to reject the upper end of the range here, as we've seen, then in many cases we're going to rotate not only back to the middle of the range, but we likely rotate across that range. So as we talked about before, the fact that we took 12K offered suggested a potential 1,000 point move into 11K. That's still in play right now, and 11,800 will likely dictate otherwise if bulls can reclaim acceptance back above that level. Okay, let's take a look now at crude oil. You'll see here with crude, we've reached the upper end of the range and have now taken out new highs. This is something we talked about before, that anytime we get above this zone, we tend not to close above it. It tends to close back below it. Additionally, we still had this previous high to come get right here, and price finally got it. So again, this thing exploded through the range, has now taken out that high. If you like expanding ranges here, we talk a lot about them in the room, especially over the last day or two. This is one of those cases here where we have now taken out that high. If price falls back below 42s here, that will be an early indication of a likely snapback to the 39 to 40 zone. That's been about where we've been. So every time we've rejected the upper edge, the $60 level has been very sticky. It's been like a magnet here, that $40 level. It's like a magnet to price, so it's a sticky level there. But the other side of the range here into 39 has been a zone that it has come across before it has either bounced or looked for further price discovery. So if price cannot stay above the previous month's high here and that 42 level in general, there could be a snapback not only to 40 but into that 39 lower level. And at that point we may see it bounce back up to 41.20 and we kind of chop around. So right now, very good strong push across the range. We mentioned yesterday that we likely had more upside to get to this level. So the short term, the trend was still up, but start looking for rejection, because any rejection up here could snap this thing back toward 39 very quickly. All right, that is it for crude oil. Let's take a look now at gold futures. Now, gold had a very decent day yesterday in that it was able to hold the previous month's low, and it was able to bounce. It didn't quite get as high as 1907. That was a 1 to 2 to 3 day target, and it still may try to get there, but the last hour has been very, very bearish here for gold since its RTH open. It's been a very aggressive sell-off here in its opening move, and we are now below the previous session's low. Now there's still the potential here to see a trap below the previous session's low, below the previous month's low, and then see this thing bounce back up. But if this thing fails to hold 1850 on a closing basis by the end of the day, that might mean more of a downside flush ahead. This was a big time rejection up here at this edge up there, and now again, in order for this thing to kind of snap back as it normally does after a big high range day, we need to see a failed low here develop. So can price get back above 1858.90? Just call it 1860. Can price jump back above 1860s here? If so, that could provide a short-term bounce back toward the previous month's close, maybe the upper end of the range, and ultimately into that 1907.10. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.